We are doing Concall analysis of Varun Beverages Limited. This is for their Q2 FY25, or you can say Q3 for the calendar year. So they start off basically. Okay, before that, Varun Beverages is authorized distributor of PepsiCo products in India. They have like 90% of the volume in India. So the management starts off by saying that there were few challenges because of excessive rainfall in India, but still they have managed to achieve revenue growth of 24.1%. This is including the Bevco, which is a beverage company which they have occupied or acquired in South Africa business, and also their operating proficiency has led to an improvement of 117 basis points in their EBITDA margin, and also they have achieved an healthy profit growth of 22.3% net profit growth. And they have successfully started production in DRC, that is Democratic Republic of Congo. This is a country with population of around 11 crore people, and because the demand was very high, they had to run the factory in 3 full shifts. And they are also because of this, they are already setting up a second plant, and also they are doing backward integration. So backward integration means they are doing all the their beverage, obviously they are doing in the factory, and for that bottle or caps, all these things which has to be supplied with, they are planning to do that also. This is known as backward integration. And the company is planning to raise 77,500 crore QIP through issuance of equity shares, so that they can support their growth plans and also expansion into new territories and strategic acquisition. So for all these things, they'll be using this QIP money. So then Raj Gandhi, he gives more financial insights. So they say that Indian market grew only by 5.7%, whereas international market grew by 7.9%. India was so because of heavy rains, because of which the sales were low, and the carbonated soft drinks accounted for 75% volume, whereas juice accounted for 4%, and drinking water accounted for 21% of total sales volume. Then the gross margin for the company, which is by if you remove cost of raw material from revenue, that gives you gross margin. So that is 55.5% for this quarter, which was earlier 55.3%. So that has improved, and also EBITDA margin has improved from 22.8% to 24%. This is after all giving rent, salary for employees and all those things. Then the company so and the depreciation, so then the profit growth was around 22% only because of higher depreciation due to acquisition of beverage company of South Africa, and also because of finance costs have also shot up by 89% because they had to buy, so they had to take loan to acquire this company. So because of all this, profit after tax grew by only 22.3% to almost 628 crores, which was around 514 crores in last year. So yeah, profit growth has been there, but it's not as much as EBITDA because their depreciation and finance costs have been high, and this is because of acquisition that they have done of beverage company in South Africa. And also in other income, they have received around 310 million as a dividend from Sri Lankan subsidiary. So this is the first dividend which they have got from this subsidiary, and this is also non-taxable under income tax. Then again, the management says that he says about the QIP which they are planning to do, and also the net debt was around 6,000 crores, and this was including the current work in progress which is happening for next for calendar year also, by through implementation of plant at Kangra, Himachal Pradesh, Prayagraj, Uttar Pradesh, Buxar, Bihar and Meghalaya. So yeah, with this the management remarks will are closed, and now it's on to analysts. So yeah, first question was so first question was regarding India volume growth. So the person asked like if there are any regional wise degrowth or brand wise any differentiation that they can see. So the management says, and also his second question was on Campa cola, which is being which has entered into the market, like how it is affecting them. So the management says that first, second and third quarter is normally it should be looked as a combined quarter because rain can shift one quarter here or there, and as rain affects a big portion of of it. So they can't tell what will happen, and because of that the sales have been low, and there are no other major regional challenges or anything of sorts, is what the management said. And then coming to Campa Cola, so the management, yes, they are saying that yes, Campa is a formidable competition, but they are in a market, but we are improving our go-to market, like we are reaching out to more retailers, and we are doing new strategies, and they might affect, but whom will they affect, we are not sure. It might be even smaller beverage brands as well, or people who are very strong into cola, those people might be affected. So it's a wait and watch, but they agree that they are a formidable player, and they also say that their market is so huge that there are around 12 million FMCG outlets, and Varun Beverages has reached only 4 million. So the company says that there is enough room for growth and new competitors as well, and maybe who knows, market itself might expand as well. Like basically what it means is that people might enter by drinking Campa, then they might upgrade to higher thing, like which is offered by everyone, like Pepsi or 7 Up. So you'll never know what will happen, is what the management says. But yeah, they do consider them as a major competition. Then the person asks, like, agreed that market opportunity is there, but how will margins be affected because of campus? So the management says EBITDA has actually gone up, so that speaks for itself. Then next question was on QIP, like how, what will they do with the money that is being raised? So the management says that it will be used partly for debt reduction, also for acquiring new opportunities or acquiring businesses. So as and when business opportunity comes, they want to take debt, because if they have so high debt now, nobody will be able to give debt then. So they want to reduce the debt so that they have a war chest ready whenever opportunity comes. And also they're planning to expand the food business, which they in South Africa. So for all this, the money will be used. So they don't have any short plan as of now. It all depends on how the opportunities come in the market. So then another person asked, because my India business was slow this time, will there be a need for inventory correction? Because Dabur did it, like they saw around 2 to 3 quarters of back-to-back sharp correction in inventory. So do you see that? So the management said that their inventory they can correct within 30 days. It's not very high. And also they say whenever they see favorable raw material pricing, they manufacture more and they pre-buy it and they store it in their store. So yeah, there is no inventory problem as of now. Then the person asked, like, in terms of 10 rupees, what are we selling? So the management said except for glass bottles, they don't have anything in PET. Then the person asked, like, because at 10 rupee price point, are we planning to do something like come into this thing? And also he says that PET bottles are cleaner and they're easy to carry, so are we planning to launch that? So the management says that as of now they don't have any plans. All eateries and restaurants, they prefer glass bottles because margins are high, whereas PETs are in on the sales go. PET is that plastic bottle which we get. So yeah, and the management says that their PET bottle pricing as of now is 20, and Campa is 10, and the products are not similar, like both are differentiated product, is what the company says. And then another person are specific to Africa, like how what is the roadmap for DRC, and how the sales are, like sales in South Africa is about 60 million cases. How is the seasonality in that market and things like that. So management says in first 6 months in South Africa they primarily fixed back end, as it was a low season, and they were, and it's similar to our season here, winters. Their peak season is from October to March, and if they have sold 60 million cases in already in the first 6 months, they're aiming for more cases in the coming 6 months. So they were fixing their back end so that when market comes and when the demand comes, they are able to fulfill it more efficiently. And as far as DRC is concerned, as they told in the initial thing, that there was a lot of demand, and that's why they're planning new capacities, and all these things will be happening by January, February in partial, and balance will be happening by July, August. So the management said that as of now 35 million cases they are doing in DRC per shift. So by this time next year they'll be doing more than 70 million cases, like they'll be more than doubling their capacities, what the management says. Then the person asks, like, if 60-40 split which happens in India, that is in September, in 2 quarters they achieve almost 60% of sale. One is Q4 and the other is Q1. Q4, that is summer season, they and another quarter, they expect they have almost 60% sales, and in the remaining 2 quarters they have 40% sales. So will this be followed even in South Africa? The management said yes, it will be there even in South Africa as well. And then the person asked, like, because the Jeera sodas are selling a lot even in many stores in Mumbai, so is there some plan of company doing something like that? So the management said they are in discussion for something like that. They already have Nimbu masala soda with Jeera. The PepsiCo, whenever they are planning to come with a healthier formulation, they are working on it, and once they come up with that, they'll be selling it. And the manager person asked how big the Jeera market is. So the management says Jira market is expanding and is doing well, and a lot of people are looking at this category, and we are also seriously looking. So they're waiting for a product from PepsiCo to come in this regard. And then another person asked how there was 120 basis point dip in current quarter gross margin of India. Why was this? So the management said this was because water, which was considered as other expenses previously, has now been included in cost of goods sold. So they are including that in raw material. That's why the net margin has come down by this number, is what the management says. Then another person, our South Africa market has been doing well. What are the initial steps that we have taken in the market? And secondly, with respect to food distribution business of PepsiCo. So the management said that the PepsiCo they have not given them the food business in South Africa, and they are basically improving their go-to market. That is, they are basically reaching more and more retail stores in South Africa, and also they have corrected their back end so that previous all those inefficiency which was there are now running efficiently. And then he asks about current work in progress was about 12,200 crores for till June. So how much is it now? So the management said it's 400 crores. So basically in this quarter they've executed around 800 crores of projects has been completed, and it is running. The next person asked that the margins in South Africa were slightly lower than the average international realization margin. So how have this been improved? So the management said that these are initially before acquisition, these lines were running at 50% efficiency, and now they are corrected and they are running efficiently. So all these things will start coming in from the coming quarters. And also they are buying all these materials which are required, like sugar and whatever bottles, all those things in bulk as a group. So these advantage also will start coming, and they'll see more and more profit margin expansion in the coming thing. The key is that they need sales to go up, which happens by reaching out more and more stores. Then they're also saying that there will be a good bump in sale in South Africa because peak season will be starting now from October to March. Whatever was there till now was in the week or demand itself. And then as far as DRC is concerned, in the first 4 weeks itself, they have seen such a huge demand, and this was beyond their expectation, and they have performed very better. So yeah, then they sold 34 million cases in international. So how much of it was from DRC? So the management said it was 5 million, and it was only about 1.5 month into operation. So if we do 12 months into operation, it comes out to be around like 40 million cases just in DRC as a country. Then the person asked on the other international business, Zimbabwe had all this sugar issue, and has it all been resolved? So yeah, the complete company management said it is in the process. That's why because of that, Zimbabwe did not show this any growth this year due to transition to low sugar. However, other markets like Zambia, Sri Lanka, Morocco, they are doing well. Zambia in fact grew close to 30% for them, is what the management is saying. So then another person asked, like, because now Campa has come, will the company concentrate on keeping their margins intact, or will they concentrate on gaining market share? How would their long-term thinking be? So the management answers by saying that the first of all thought process should be that to expand the market, like they are doing right now, 3,000 to 4,000 outlets every year. If they are adding that many, and Camp has just entered, and for them to reach that much, it will take a lot of time. And out of 12 million outlets, they are selling only to 4 million outlets right now. So they are adding 3 lakh to 4 lakh outlets every year. So it will take them a lot of time for just to reach the 12 million outlet stores. So, and that is their go-to strategy, and we are pushing. So yeah, then they're also saying that If necessary, we can they will create another brand which will compete on the pricing front for camp as well. Then the management, then one person asked, like, because you pay concentrate charges to Pepsi, and Camper doesn't have that, because of that, are they able to price it cheaper? So the management said, no, it's not a very huge component for them. Then another person asked, like South Africa, when you acquired the management, the market share was in low single digit, and now how is it doing? So the management said that they have grown last quarter at 12%, and September quarter they have grown at 20% year on year basis. So this all shows that they are actually gaining the market share. Then other person asked, like, in India, how are tier 2, tier 3 cities doing, and rural and urban compared? So the management said that when there are rains, rural is always the first one to get affected. And also rural, when the quarter is very good, rural is the one that grows faster as well than the urban. So yeah, because in India soft business is influenced by rains, it plays a big role. So that's what the management is saying. Then another person asked, like, have you seen benefit of low sugar usage, and also reducing the thickness of bottle? So how is it helping, and will how till when, which quarter will this coming? So the management said that all these effects will keep coming, because all our new plants are equipped with all these things. So there are large plants which are coming, which are much more efficient than older plants, and they are also backward integrated. So almost 17 of their plants are now backward integrated. That means they do their own caps, boxes, preforms, and because of this, they are saving on freight costs as well. Though these are all small costs, when they add up over a large number, it becomes a huge cost. Then they're saying that the new plants, which used to, like, old plants used to do 100 to 200 bottles a minute, now they're producing 800 to 900 bottles. So with the same number of people, all these things are happening. So yes, operational efficiencies will keep coming in for the coming quarters as well. Then the person asked, there are many beverage companies are showing a degrowth or subdued performance, but you have grown 6%. How is that possible? So the management says that they are investing in enough money in backward integration and also in expansion of plants. So whenever they open a new plant, they are coming closer to the market, because of which they are saving on transportation costs, and their new plants are with higher production capacities and much more efficient, and they are also adding close to 3 lakh to 4 lakh outlets every year. So yeah, if they could reach even 8 million from 4 million what they have now, their sales will directly go up by 50%. So all these things are helping them, which many beverage companies might not be doing, is what is differentiating them from by growing and others degrowing. Then the person asked, like, 30% mandatory use of RPET, how is the status on that? So the management said that their first plant will be operational by second quarter of next year, and will be producing enough RPET to meet the government mandatory requirements before the deadline. So yeah, all plants are not there, but some will be there. But that plant will be enough to meet the requirements as a whole of the company. Then the person asks, like, food business, how is the arrangement for Zambia and Zimbabwe, where we do the manufacturing and distribution and business model, how does it look? So yeah, the management says it's like a franchise only. We will be paying for concentrate, we will be paying for seasoning. The same arrangement will happen for Morocco, Zimbabwe and Zambia, and Morocco will be the first plant to come up. And then the person asked, like, food portfolio is very less when compared to beverages in Africa. So how is the company planning to do? So the management said that only in South Africa they are producing snacks. That is, PepsiCo is directly producing snacks. Rest all in all other countries of Africa, they are not doing it, because Africa is huge and they have to transport through air. So they either have to make it there only and sell it. Import and other things won't work, because transportation will be too costly. So these the company is talking to PepsiCo, and whenever they give the right, like, opportunity, they'll seize it and they'll start manufacturing. So yeah, only distribution doesn't work, because it's too expensive for them, is what the management is saying. Then another person asks, like, you are doing very great on operational efficiency and all that, and is there any other hit product like Sting coming out? So the company says that that they let them know as soon as it comes. Like, as of now, PepsiCo is working on many exciting things, and once it comes, we'll definitely let you know. The other person asked what will be the capex for next year. So the management said 2,400 crores, which is for primarily implementation of facilities in Kangra, HP, Prayagraj, UP, Buxar, Bihar, and Meghalaya. So then another person asks what debt level are you comfortable in? So right now it is 0.7x. So the management said that in case of there is a merger and acquisition and they have to take debt, the max they would like to go is like one times of debt to equity. Like more than that they are not comfortable. So that's why they are doing the QIP and being ready with the war chest. So whenever opportunities come, they can seize it and they don't want to miss out on that. Then another person asks, like you have not mentioned anything about food and snacks business. So what about that? The company said that there will be three plants coming out next year in Zimbabwe, Zambia, and Morocco. So yeah, in India they don't have snack business of PepsiCo. Only in Africa they have that too in these three countries, and all three will be coming in the next year is what the management said. And only one plant might just it might happen in early 2026, but rest two will be operational in the next year itself. Then another person asked if can you give volume growth for carbonated, non-carbonated, and all those things. So the management said in all three segments, coincidentally, carbonated, juices, water, all have grown equally, and there is not much difference. Then they're also saying that south and east they got recently. Matlab, they had only north and west parts of sales distribution right of PepsiCo, but now they have gone south and east also is given, and their very low penetration is there. So and even in Gujarat they had low penetration. So these come, their target is to reach more and more outlets and say increase the sales. So then the person asked there are a lot of distributors and so many things, why can't we do 5x in 1 year? So the management said that it's a complicated process. There is a need for coolers, truck people, and many other things, and also you need around 3,000 to 4,000 people which needs to be added and trained if you are planning to serve 4,000 or 4 lakh outlets. So yeah, it's not easy to go 5x in just 1 year is what the management said. Then another person asked, like Bevco had some of their own brands as well in snacks. So are you scaling up that as well? So yeah, the management says they are scaling up that as well. But PepsiCo as a brand is growing faster than their own brands, is what the management said. And then the contribution of string for 9 months is close to 15% in the sales. Then another person asks what is their priorities, like is it like to expand into newer territories like Africa, or do it more and more sales in India itself and expand into new categories within India. So the management said that Africa, like if you see next 20 years Africa, they appear to be very bullish on that. And also they each and every country has its own problem in Africa, so they are doing 2 to 3% of turn 2 3 or 5% of turnover from each country, so that even if there is any issue in one country, it shouldn't affect them. And they're also expanding in India as fast as they can. So as and when the opportunities come, they're analyzing it, and then they're taking the call whether to expand into new territories or to launch new products in the same country, that is India. So then another person asks, you had given guidance, and actually margins are higher than that. So because of this, do you see more upward revision, or will you see some raw material side risk? So the management said that they've never given guidance. So in soft drink industry, 21 to 22% is the margin the best you can get. But companies always trying to beat that and keep on doing increased margins of improved margin. So yeah, and raw material side, the management said that they don't have that in their control. Like if crude oil prices go up or sugar prices go up, that they are not in their control, but they are doing whatever they can to mitigate the risk. That is like by reducing 49% of our sugar portfolio is low sugar. So yeah, all these such things they are doing, and they want to keep margin well above 21 to 22%. So then another person asked, like let's say three snacks factories in Africa start operationalizing, then how much sales are you expecting? So the management said that around $100 million dollars is what they are expecting. And then the person asked, like how can you give us how snack business is when compared to beverages, like is it capital intensive or margin low, or how is it? So the management said that These businesses are less capex but more turnover business, and this is the reason why PepsiCo is not giving snacks business and they are doing it on their own actually. So only in South Africa they are doing, whereas rest all in Africa as of now, three countries they have given to Varun Beverages, and Varun Beverages is the biggest franchisee for PepsiCo other than in the US itself. So yeah, ROCE will be better, but margins would be a little lower when compared to beverages business, is what the management said. And that's it. That was the call. So if you like this con call of beverages, Varun Beverages, hit that like button, share, and subscribe. Thank you.